Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Thursday, October 31st, 2013. On Tuesday, S&P futures rallied up to a new multi-year high at 1773 during the overnight session. At the open, the S&P had sold down below the overnight high and pulled back to fill the gap at Tuesday's close. S&P futures failed to hold support at Tuesday's close, and selling pressure drove the S&P down into the prior trading range. The price action paused temporarily at or near the 1762 price level, 10 points below the overnight high. However, following the FOMC announcement, selling pressure returned, and the S&P traded down another 10 points, auctioning down to 1752 at or near prior support during Monday's trading session. S&P futures retested Wednesday's low during the overnight session and auctioned back to where the initiated selling had occurred. At Thursday's open, the broad benchmark index sold down from the overnight high and pulled back to retest support at yesterday's low. Price discovery resulted in a modest lower low. The S&P traded 2 points below the previous low before the selling pressure ended and the market auctioned back up through the trading range. Following the retracement back to where the initiated selling had occurred during Wednesday's session, buying interest waned and the S&P once again sold back down through the trading range, auctioning down to 1752 into the close. Market made a modest uptick off the low and traded back to 1754. For a detailed review of today's market developments, we'll turn our attention to the point and figure chart. Overlaid on the point and figure chart is a polynomial regression channel. I have also indicated all the major resistance levels and support levels, as well as the minor inflection points that occurred during today and yesterday's session. Here we see the point where the initiated selling started during Wednesday's auction. We had identified in yesterday's market structure the key initiated selling point at or near 1762. The low, down at 1752, was identified during Monday's session, and we had an additional reference to the 752 low from Friday's auction. Here you see the retracement that occurred during yesterday's close and the pullback that occurred in the overnight session. By Thursday's open, the S&P had traded back to where the initiated selling had developed and sold straight down through the trading range and retested the prior support level. Here we see the minor breach of support 2 points below the prior low at the approximate location where stop loss orders are likely to be resting below prior support. When the computerized programs ceased executing to the sell side, the S&P auctioned up off the low and traded up through the trading range. Midday there was a long period of narrow trade activity, but eventually the S&P retested the opening range high. Notice that price auctioned again 2 points above the previous high to the approximate location where stops are likely to be resting. Following the retracement up to 1764, the selling pressure returned. When the S&P sold down from the high, it failed to hold support at the minor levels that had developed earlier in the session. After a brief pause at or near the 1756 level, the selling intensified and the S&P sold down to once again retest support at or near 1752. Coming into Friday's session, the weakness we saw at the close suggests that once again we would expect to see the low retested before the S&P attempts to move higher. We would expect to see price trade down at or near 1752, either in the overnight session and or at Friday's open. There's a minor resistance level here at or near 1756, 1757, where the selling pressure intensified late in the day. However, resistance is located up at today's high, which corresponds to the retracement that we observed during Wednesday's auction. Above today's high, the next resistance level is located up at or near Tuesday's close and Wednesday's opening range price level at or near 1768. The activity that occurred during the overnight session when the S&P traded up to 1773 indicates that there is very little volume resting up at this point, and should the S&P auction above 1768, there would be very little in the way of overhead supply to inhibit the S&P from auctioning back up to the Globex high at 1773. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.